Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for March 18th, 2018. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 0.92 rose from 0.89 last week, advancing slightly, but still within bearish territory. The total count of securities in bullish or bearish patterns decreased 3% to 2,632. The count of bearish stocks decreased 5%, while the count of stocks in bullish patterns decreased 1%. The Pirls PNF Market Breadth Summary Chart shows us a market now 7 weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To have the Pirls Stock Market Commentary delivered to your email inbox on a weekly basis, free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 139 points for the 11th advance in 22 weeks. At a positive 280.82 points, it has risen above the July 2000 top, continues below all remaining 7 tops in the last 30 months, and continues above all 5 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 6 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in accumulation mode on lower average daily volume. Momentum. At Monday 3/5 close, the CCI 20 daily in a Woody's uptrend within the plus or minus 50 range formed a zero-line reject long entry signal. At a positive 79.14, down from a positive 157.68 last week, it fell below plus 100 at Thursday 3/15 close, signaling our exit for Friday 3/16 open. The result of this trade simulation was a gain of 137.76 points on the Nasdaq, or $3.17 per share of QQQ. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 98 weeks ago, while the daily CCI 20 began a Woody's uptrend 2 weeks ago. Following last week's successful trade simulation, the CCI 20 rose this week to 132.79 from 124.27 last week, and continues outside the plus or minus 50 range for a new zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: some tech on top, gold and silver and KBW Bank on the bottom. Bullish, semis, disk drives, networkers, and computer hardware continue in the top 5. Gold and silver continues in the bottom 5. Bearish, KBW Bank has entered the bottom 5. Brokers has left the top 5. Oil and oil services have left the bottom 5. Focus this week from www.zerohedge.com. FANG plus Apple now account for a quarter of the NASDAQ, and some are getting worried. The following are some key points and charts. While many parts of the market have experienced a rise in price volatility in recent months, it has largely been a one-way street for the tech darlings of Wall Street. Apple, Facebook, Amazon, Netflix, and Google, also known as FANG plus Apple, have grown their collective market value by more than 40% in the past year, to $3 trillion, and now accounts for a staggering 25% of the NASDAQ composite. With Apple $900 billion in market cap and Amazon $760 billion, racing to see which company hits the historic $1 trillion in market cap first. Below, we show the Bloomberg consensus forward estimates for these 5 companies. Amazon, 2018 P non-GAAP EPS, $16.75. 2018 adjusted net income, $7.56 billion. Forward PE, 189.9x. Netflix, 2018 P non-GAAP EPS, $3.07. 2018 adjusted net income, $1.435 billion. Forward PE, 116.4x. Google, 2018 P non-GAAP EPS, $12.11. 2018 P adjusted net income, $8.55 billion. Forward PE, 27.3x. Facebook, 2018 P non-GAAP EPS, $8.38. 2018 adjusted net income, $24.65 billion. Forward PE, 25.6x. Apple, 2018 P non-GAAP EPS, $11.51. 2018 P adjusted net income, $58.5 billion. Forward PE, 15.5x. Adding across, the 5 companies are projected to make just over $100 billion in adjusted net income in 2018, far less on a GAAP basis, much of which is expected to come from ad sales, which means that as a sector, these 5 companies are now trading at 30 times blended forward PE multiple. Hardly cheap. However, momentum for some major technology stocks is already showing signs of moderation. Facebook has fallen 5% after hitting a record high at the start of February, with some investors worried that people are spending less time on the social media platform, while others are concerned about Zuckerberg's increasingly more frequent appearances in Congress as a result of ongoing, quote, fake news, close quote, scandals. Quote, people are going with what works, and if tech was working before the shakeout in February, then they're going to stay in it, close quotes, said Joe Saluzzi, co-manager of trading at Themis Trading, loosely paraphrasing Chuck Prince's legendary words from the summer of 2007. Quote, when the music stops, in terms of liquidity, things will be complicated. But as long as the music is playing, you've got to get up and dance. We're still dancing. Close quote. A little over a year later, the S&P was trading over 50% lower. Thank you for watching this week's Sand to Pearls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant St. Patrick's Day weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.